Good morning. It's Monday, October 13th, and here's everything you may have missed in business and finance since Friday morning. On Friday, Wall Street had a bit of a meltdown. The Dow was down almost 2%, the Nasdaq slipped 3.56%, and the S&P 500 fell 2.71% as investors braced for the next phase of a renewed trade war between the world's two largest economies. It all started with a tariff tit for tat. Just a day after China tightened exports of rare earth materials, the metals that power everything from smartphones to EV batteries, President Trump came back proposing a 100% tariff on China over and above any tariff already in place. He also suggested putting in place export controls on critical software and suggested that he may cancel his meeting with President Xi in South Korea later this month. Beijing wasted no time responding, saying that resorting to threats of high tariffs is not the right way to engage with China, and if the U.S. persists in acting unilaterally, China will resolutely take corresponding measures to safeguard its legitimate rights and interests. President Trump did walk this back a bit yesterday, posting Sunday on Truth Social saying, "Don't worry about China, it'll all be fine. Highly respected President Xi just had a bad moment. He doesn't want depression for his country, and neither do I. The USA wants to help China, not hurt it." We'll see how that impacts the market today, but for Friday, the damage was already done. Even in a rough session, though, there were some bright spots. MP Materials jumped 8.4%, and USA Rare Earth rose nearly 5% as investors bet on rare earth miners amid escalating trade tensions. Applied Digital soared 16% after posting a smaller than expected loss. Elastic climbed over 6% after raising its sales forecast for the second time in 2 months and announcing a $500 million share buyback. Protagonist Therapeutics exploded nearly 30% on a Wall Street Journal report that Johnson & Johnson may acquire the company. But not everyone escaped the sell-off, and some companies were hit harder than others. Qualcomm dropped 7% after China opened an anti-monopoly investigation. Chinese tech giants were hit hard. Alibaba was down 8.5%, and PDD Holdings was down more than 5%. Also, Levi Strauss sank 12.5% after warning that tariffs are cutting into profits and forcing the company to lower its fourth quarter guidance. In addition to stocks, crypto and oil also dropped sharply on Friday, and investors did scramble for safety, sending gold soaring back above $4,000 an ounce. Treasury yields plunged, with both the 2-year and the 10-year falling to their lowest levels in nearly a month. The dollar initially recoiled too, though it has since clawed back some ground. Now all eyes will turn to Tuesday morning. That's when the earnings season kicks into high gear, with JP Morgan, Goldman Sachs, Citigroup, and Wells Fargo all reporting before the opening bell. There's cautious optimism heading into third quarter earnings season. After all, the U.S. has so far avoided a major downturn, and the AI spending boom continues to fuel corporate profits. Last quarter, the S&P 500 climbed almost 8% and the Nasdaq surged over 11%. Because of that growth, Wall Street will be looking for earnings growth that supports the surge. Currently, Wall Street expects Q3 earnings to rise about 8% year over year, though Deutsche Bank is even more bullish, projecting 10.7% growth. Looking at international news, Argentina's president is set to meet with President Trump in the Oval Office this week as the U.S. finalizes details of a $20 billion lifeline for the country. This is a major moment for Argentina's struggling economy. And in the Middle East, there was a breakthrough over the weekend. Hamas has handed over all 20 surviving hostages to Israel, marking a major step toward ending a 2-year devastating war in Gaza. President Trump, who helped broker the truce, called it a great day. This week, policymakers and central bankers from around the world are descending on Washington for the annual IMF and World Bank meetings. Finance ministers and central bank governors from the G7 and G20 will be on hand, and the focus will be on trade, inflation, and the global economic outlook. So yes, right now markets are volatile, geopolitics are messy to say the least, and trade tensions are back in full force. Looking ahead, earnings season, diplomatic negotiations, and shifting trade dynamics are about to shape the next chapter of this market cycle.